Hi everyone, and thank you for tuning in. In this video, I'm going to answer the question if Lucid Motors stock is a buy. I'm going to use my simplified 6-step framework for analysis, so let's get right into it. The first step in my framework is the customer value, and for Lucid, it's creating luxury electric vehicles centered around the human experience. It's one of the most efficient luxury electric vehicles in terms of miles per kilowatt hour, ranked only behind Tesla's Model 3 rear-wheel drive version. It delivered 1,398 cars in its most recent quarter, but it has more than 34,000 reservations booked in a backlog. People can deposit $1,000 and be on the wait list for one of its cars, where the cheapest version is something like $90,000. The highest version going up all the way to $250,000. So the fact that it has this much interest in its highly priced vehicles shows that customer value, the perceived customer value, is relatively high. Looking at its net promoter score of 26 and where it ranks on what is a good net promoter score, we have its score as good. It's close to being great. And net promoter score measures how likely a customer is to recommend this product to a friend or family member. It gauges how highly a customer values the customer experience and the value they received from a company. So a promoter score of 26 is good, almost great for Lucid. Moving on to unit economics, car manufacturing is fundamentally capital intensive. Lots of millions of dollars need to go into building these manufacturing facilities. The leading industry player in terms of gross profit margins is Tesla. It earned a gross profit margin of 25% in its most recent quarter. Lucid is nowhere near that. In its most recent quarter, Lucid generated a gross profit loss of 297 million on revenue of 195 million. So at this point, its gross profit margins are terrible, but looking at its very highly priced vehicles, there is potential for it to deliver excellent profit margins in the long run. The next step in my framework looks at the total addressable market, and according to Statista, there were 67 million cars sold in 2021. That's estimated to rise to 71 million in 2023. So a massive addressable market in terms of opportunity available for Lucid Motors. The next step in my framework looks at competition, and the EV industry is becoming very competitive after years of one primary player. Essentially, Tesla dominated the market for a lot of years. New companies like Lucid, Nio, Rivian have all entered the fray in the last, I want to say, 3 or 4 years. Additionally, legacy car companies like Ford, Chevrolet, GM, and others are boosting production of their electric vehicles. So it's a lot of new players coming in, a lot of new models coming in, where before it wasn't so much so. And while demand is still exceeding supply, all of these companies are reporting wait lists for their electric vehicle models. Competitive forces are primarily right now limiting the availability and pricing of materials needed for production. So competition is on the supply side right now. In the future, as that balance reaches equilibrium, this competition could affect both the supply and the demand side, which would not be good news for EV investors in EV stocks. And the next step in my framework looks at valuation, and Lucid here, it's a little hard to see because these figures are kind of small, but if you look at Lucid here in the purple, it is the most expensive when measured by the price to sales ratio. When we compare it against Nio, Rivian, and Tesla, Lucid is the most expensive, trading at a price to sales of 45. The next closest is Rivian at a price to sales of 25. Tesla's at 8, and Nio is less than 3 at about 2.7. So Lucid is by far the most expensive EV stock to buy right now, and so it's relatively expensive as well as absolutely expensive, trading at a price to sales of 45. All right, the final step in my framework will look at the risks. And for Lucid, its primary risk right now is the massive losses on the bottom line with no assurance the company will ever reach profitability. The second risk I note here is the competition for materials are limiting how quickly the company can ramp up production. Right? Remember, it had those 30,000 backlog of orders. If it can't fulfill those orders in a reasonable amount of time, those customers may cancel their reservation and go with another EV car company that can fulfill their order maybe in a faster timeline, or maybe they might choose a different car entirely because these EV cars are taking way too long to wait to deliver. And so customers might get tired of waiting and just say, you know what, forget this. I'm going to just go buy another car. I can't afford to keep waiting like this. Okay, so now that I've taken a look at each step in my framework, let's give Lucid Motors a grade on each step in my framework. For the customer value, I gave Lucid a B, right? They're delivering luxury cars, one of the most efficient, getting relatively good scores in the NPS metric, so they get a B in that regard. Unit economics, I gave them a C here. They're nowhere near profitability with uncertainty whether they will ever reach that scale. So for now, their unit economics is getting a C. Total addressable market, I give them an A plus here. The car industry is a massive market opportunity, and A plus for Lucid. Competition, I give them a C plus. They're entering into a competitive field with several legacy competitors, several legacy manufacturing companies, and several newer EV companies that they're having to compete with, and Lucid hasn't proven itself in the field just yet. For that reason, for the risk, they get a C minus. Massive losses on the bottom line. Competition is increasing. Investors in this stock face heavy risks. And finally, valuation, I gave them a C minus. They're the most expensive looking in terms of their competitors. They're also absolutely expensive on just an absolute basis. Looking at a price to sales over 40 is just expensive, and so they get a C minus here. Okay, so in the next slide, I will answer the question if Lucid Motors is a buy right now. But before I do that, I would like to recommend for you to subscribe to my channel. This recommendation I'm going to make on the next slide is not going to be static. It's going to be changing the next month, the next quarter, the next several quarters. This recommendation might change. You're going to want to be subscribed and get that update because you're not going to want to miss out on that update. All right. So without further ado, let's answer the question if Lucid Motors stock is a buy. Lucid stock is not a buy right now. The expensive valuation coupled with the rising competition along with the massive losses on the bottom line sways me to say that this stock is not a buy right now. You have better options if you want to invest in an EV stock right now, and Lucid should not be on the top of your list of EV stocks to buy. Okay, so that's all I've got for this installment of Is This Stock a Buy? If you've gained any value, please go ahead and hit the like button. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.